Welcome back to the quarterly call. All content is for informational purposes and is not investment advice. Please consult with an investment professional. All right, today we are really getting into the weeds on a major semiconductor memory player. We're looking at their fiscal fourth quarter 2025 results and maybe more importantly, their guidance looking ahead.
Yeah, the story here is pretty compelling. Fiscal 25 wasn't just good, it was, well, record-breaking. And it seems like almost all of that, or a huge chunk anyway, is being driven by AI demand.
Right, AI, and it sounds like pretty solid execution on their product strategy too.
Exactly. It's not just strong results we're seeing, it feels more like structural shifts. In the memory market, supply dynamics, things that set the stage for 2026.
Okay, so our goal here is to kind of sift through everything and pull out the really crucial bits, the key financials, the product stuff, especially HBM, high bandwidth memory, and what they're saying about the market going forward.
Yeah, things like server growth changes, supply tightness.
Yeah.
That's the stuff that's going to shape things near term.
We want the durable insights, not just, the quarterly noise.
And I think we really need to focus on how they're getting these margins. How does this AI demand translate into profitability? That link between the product mix they're selling and the profit they're making. That's fascinating here.
Okay, let's start with the big picture then. Fiscal year 2025 overall, the numbers are, frankly, pretty stunning. Record revenue, right?
Yeah.
$37.4 billion.
Yeah, and that's almost 50% growth compared to the year before. Huge jump.
But the growth, yeah, it's impressive, but maybe the gross margin story is even bigger.
Oh, definitely. Gross margin hit 41%. That's a 17 percentage point improvement from FY24. 17 points.
Wow.
That kind of expansion, that leverage, turning revenue into profit so efficiently, that's not just a cyclical high point. That signals they're really shifting towards these high-value products.
And then you see it trickle down. Earnings per share, the EPS figure, just exploded.
Yeah, 538% higher than the prior year. It reached $8.29.
538%. You just don't see that kind of jump often, especially in tech sectors that are pretty mature.
No, you really don't. It shows what happens when that operating leverage kicks in, especially coming off a downturn. But, back to the product strategy.
Yeah.
You can actually pinpoint where a lot of that value came from.
The high value stuff. You mentioned a $10 billion figure that caught my eye.
Right. So combined revenue from HBM, those high-capacity DIMMs, and also the LP server DRAM, that's the low-power stuff hyperscalers love for energy efficiency. That bundle hit $10 billion in revenue for the year.
Okay. And how does that compare?
Well, that's more than a five-fold increase from the previous fiscal year.
5 times?
Yeah. I mean, this category at this scale, it barely existed a couple of years back. It shows how fast they pivoted to meet what the AI market needs and is willing to pay for.
So the momentum was strong all year. How did things look right at the end in fiscal Q4?
Kept going. Another record quarter for revenue, $11.3 billion.
And DRAM's still the big driver.
Oh, yeah. Q4 DRAM revenue alone was $9 billion. Another record. That's, 79% of their total revenue?
79%. So they're really leaning into DRAM.
It seems like a conscious choice, right? Focus on their strength, put the capacity where the money is, which is to DRAM, especially certain types of DRAM.
And with demand so high, I guess pricing followed.
Exactly. DRAM prices were up low double digits percent sequentially in Q4, partly the tight supply across the whole industry, partly their specific mix of products being favorable.
Makes sense.
And it wasn't just DRAM. NAND revenue was $2.3 billion. And NAND prices also climbed high single digits percent sequentially. So the rising tide lifted both boats, so to speak.
Okay, so FY25 Q4, record numbers. But then they gave guidance for Q1 of fiscal 26, and that seemed to really grab attention.
Yeah, aggressive might be an understatement. They're guiding for Q1 revenue of $12.5 billion, give or take $300 million.
Which would be another record quarter.
Right. But honestly, look past the revenue for a second. The gross margin guidance is the real jaw-dropper.
This is the one, 51.5%.
51.5%. That's a jump of 580 basis points sequentially from Q4.
Just insane. For listeners, a basis point is 1/100%. So 580 is... Well, it's a massive leap quarter over quarter for a company this size.
It's extraordinary. In a good market, maybe you see 100, 200 basis points sequential improvement. 580 suggests something fundamental is shifting right now. It has to be about the specific stuff they expect to ship in Q1.
Okay, so if pricing was already strong in Q4, what's the magic combo driving that kind of margin jump into Q1?
It feels like three things hitting all at once. First, continued strong pricing, especially for the top-tier data center stuff where supply is just super tight.
Okay.
Second, and this is probably the biggest piece, the product mix is tilting even more heavily towards the absolute highest margin products. Think HBM, think those big server modules.
Got it. More of the premium stuff.
Exactly. And third, they're just executing really well on costs. The node migration's getting more efficient.
Yeah.
They're making the bits cheaper to produce right when the market lets them charge more.
So lower cost per bit, higher price per bit. Nice combination.
It's the perfect storm, really. Getting paid premium for stuff they can now make more efficiently.
It all seems to circle back to the data center, doesn't it? That part of their business hit 56% of total company revenue in FY25.
Yeah, and the gross margin for that data center segment specifically was 52%. Really shows the payoff from targeting AI.
And they're so bullish on it, they've actually revised their outlook for the entire server market upwards.
Significantly.
Yeah.
They're now expecting calendar 2025 total server unit growth around 10%. That's up from their previous estimate of mid-single digits. That's a big revision for a market that size.
Okay, but here's a really interesting detail I picked up on. It wasn't just AI servers. They also raised their outlook for traditional server growth, from basically flat now up to mid-single digit growth. Why is that happening if all the buzz is about AI hardware?
Yeah, this is super important. It's like a ripple effect. We focus so much on the AI accelerators, the GPUs with HBM stacked on them.
Right.
But they're saying part of this traditional server boost comes from AI agents. Think of these as smart programs. AI is doing complex jobs for users.
Okay, so the agent gets trained on the fancy AI server. Then what?
Then the agent has to actually do things. It needs to run its analysis, query databases, manage files, maybe generate code, run simulations. All that execution often happens on more traditional server infrastructure.
Oh, okay.
So the AI isn't just this isolated thing. It becomes an active user, a demanding user that forces upgrades across the board, networking, cooling, standard compute. If you run a data center, you have to make sure your existing gear can handle what these new AI clusters are churning out.
That totally reframes the spending cycle. It's not just AI boxes. Okay, let's zoom in on their star product. HBM, high bandwidth memory, Q4 revenue, almost $2 billion.
Yeah, nearly $2 billion just in Q4, which, if you annualize it, is getting close to an $8 billion run rate. That's serious scale, very quickly.
And they feel good about their position. Seems like it. They explicitly said they're on track to get their HBM market share in line with their overall DRAM share by calendar Q3. That's a big deal technically and operationally. It means they're a top-tier, high-volume supplier now.
And the market's tight. We heard they've already got pricing deals locked for most of their 2026 HBM3E supply.
Yeah, with almost all customers for the vast majority of 26 supply. That tells you everything about how constrained things are. Customers are locking this stuff down a year and a half in advance. HBM is clearly a bottleneck, and this company is sitting pretty, having secured that capacity.
So that's HBM3E. What about the next generations, HBM4 and HBM4E? They said HBM4 is on track.
On track for customer ramps, yeah. And they highlighted some pretty impressive performance from the samples they've shipped.
Like what?
Bandwidth over 2.8 terabytes per second, pin speeds over 11 gigabits per second. Industry-leading numbers.
And how are they getting that performance edge? It seems to be a combination. They point to their 1-beta DRAM node, which is their current top manufacturing process, good density, good power efficiency, plus innovative HBM4 design itself. And, crucially, they're using their own in-house advanced CMOS base die.
The base die, that's the bottom layer of the HBM stack,
Exactly.
right? Controls logic and stuff.
Exactly. By designing that base die themselves, they control the whole integration. They can optimize it for power, for latency, everything that matters for these AI chips. That vertical integration is a real differentiator, likely helps with performance and maybe pricing power too.
Okay, and then there's HBM4E. They mentioned a customization option.
Yeah, this sounds like a potentially big strategic move. They'll offer standard HBM4E, but also an option for customers to customize the base logic die.
Customize it how?
Well, for that custom base die, they plan to partner with TSMC for manufacturing. So if a big AI customer needs specific logic or features integrated right onto that base die to work perfectly with their own unique chip, this company could deliver that.
So they become more like a co-developer than just a component supplier.
Precisely. It creates stickier relationships, solves unique, high-value problems for the customer.
And the payoff for them.
Higher margins. They explicitly expect the customized HBM4E to deliver better gross margins than even the standard HBM4E. Custom work commands a premium, right? And it builds a huge competitive moat. Very sophisticated play.
It's not just HBM, though. Their broader portfolio seems to be catching the AI wave, too. LPDDR5 for servers.
Yeah, LP5 saw over 50% sequential growth. And they highlighted being the sole supplier of LPDRAM for NVIDIA's GB product family in the data center since launch. That's a huge design win. Shows their strength in low-power DRAM beyond just HBM.
And looking even further out.
They mentioned GDDR7, positioned for future AI systems that need absolutely blazing speed, talking pin speeds over 40 gigabits per second, maybe for edge AI or specialized systems where latency is critical.
Okay, let's not forget NAND. DRAM gets the headlines, but NAND's part of the AI story too.
Definitely. Data center NAND demand is strong, and they pointed to two specific AI inference use cases driving it.
Inference. So using the trained model, not training it.
Right. And the use cases are KV cache tiering and vector database search and indexing. Both need really high-performance storage to quickly feed data to the models during inference.
So it's not just about massive capacity anymore. It's about speed for these specific tasks.
Exactly. You still need high-capacity SSDs for bulk storage, but these inference tasks demand performance storage. And they're responding, launching G9 NAND data center products first to market with PCIe Gen 6 SSCs, using that G9 NAND. It's kind of a parallel race to HBM, making sure the whole memory system keeps up.
Underpinning all this is the operational side, right? Getting the tech working, getting the yields up.
Absolutely. That's the foundation. Look at the 1 gamma DRAM node. They got it to mature yields in record time, 50% faster than the previous node generation.
50% faster.
Yeah.
That's huge for costs and getting product out.
It's a massive competitive advantage. 1 gamma is their newest, most advanced process, shrinks the cells, fits more bits per wafer. Getting mature yields fast means hitting profitability targets sooner. And they're already scaling at first revenue from a major hyperscaler on 1 gamma server DRAM. That speed is key to hitting those margin goals we talked about.
And similar progress on the NAND side, G9 production.
Yeah, G9 ramp is going well. Already qualified for enterprise storage, including QLC NAND, that's the super dense stuff for data centers.
And here's an interesting twist. They're using AI themselves to get better at making this stuff.
Right. It's not just selling to AI companies. They're using AI internally. They reported seeing 30% to 40% productivity gains in some Gen AI use cases like code generation.
30 to 40%, that's a big internal boost. Must speed up R&D.
You'd think so. And in manufacturing itself, the impact sounds pretty structural. They mentioned a 5-fold increase in the number of wafer images they analyze over the last year.
Okay. What does that mean practically?
It means they're basically doubling the useful data they get from their fab tools. AI lets them process this huge amount of data, which leads directly to better yields, better quality control. That helps them hit those tough specs, like the 11 gigabits per second on HBM4. Better data, better chips.
Okay, let's talk about building the factories.
Right.
Capital investments, HPS Act, that's the long-term supply picture. They got a CHIP-DS grant for Idaho.
Yes, grant dispersed. Construction hit a key milestone.
Yeah.
And the timeline is getting clear. First wafer output from that Idaho fab expected in the second half of calendar 2027.
2027. Still a ways out, but crucial for U.S.-based supply.
Absolutely. And they're already planning ahead. Design work has started for a second Idaho fab for capacity needed beyond 2028. This isn't just one factory. It's a multi-decade plan.
It's global too, right? New York, Japan.
Yep. Initial environmental studies done for the big New York site.
Yeah.
And in Japan, they just installed their first EUV tool. That's extreme ultraviolet lithography, the really cutting-edge stuff for their fab there, enabling that 1 gamma capability.
EUV, those are the super complex, expensive machines.
The most complex.
Right.
And they noted something interesting. The time it took them from receiving that EUV tool to getting it fully installed in Japan was apparently a global record.
Really?
Yeah. Installing EUV quickly is a huge operational feat. Speaks volumes about their competence, their efficiency. Handling that tech well is key because EUV is a major bottleneck for leading-edge supply worldwide.
And specific capacity for HBM, too.
Singapore. Right. Construction of an HBM assembly and test facility in Singapore is on track. That should start contributing to HBM supply in calendar 2027 as well.
So it's a massive, coordinated global build-out, building the capacity for these high-margin AI products.
Exactly. Funded partly by incentives like GPAs, partly by their own growing cash flow.
Let's zoom back out to the market dynamics. They revised their industry demand outlooks upwards again.
Yeah, slightly tighter, showing more conviction. Calendar 2025 industry DRAM bit demand growth, now seen in the high teens % range. NAND demand revised up too, now low to mid-teens % growth expected.
Demand looks solid, but here's the kicker, right? Their own supply growth.
This is the crucial part for understanding the market tightness. Their own calendar 2025 bit supply growth is expected to be below that industry demand growth. for non-HBM DRAM and also for NAND.
Below demand. So they're consciously choosing not to flood the market.
Looks like deliberate supply discipline, prioritizing profitability, pricing power, rather than just chasing volume or market share, especially since converting wafers to HBM already tightened supply for other DRAM types.
Makes sense. Keep things tight, keep prices firm.
And that's why they expect DRAM supply to stay tight and NAND conditions to strengthen right through 2026. They see it as structural, not just temporary.
What are the specific structural things keeping supply tight into 26? Sounds like more than just AI demand.
It's like three things woven together. First, just low inventory everywhere. Suppliers don't have big buffers. Their own DRAM inventory days are below target, for example.
Okay, low stocks.
Second, node migrations are constrained. This is interesting. The industry still has to support older stuff like D4 and LP4 memory for customers in industrial or auto who need long life cycles.
Ah, so legacy products slow down the shift to the newer, more efficient nodes like 1 gamma.
Exactly. It ties up capacity engineering effort, acts like a brake. And third, the big external factor. It's just really expensive, complex, and takes a long time to build new wafer capacity anywhere in the world.
Right, years, not months.
Yeah, you can't just instantly respond to the AI demand surge. Those long lead times lock in supply constraints for years.
Which makes their spending decisions, their CapEx, super critical. FY25 was about $13.8 billion net, and FY26 looks to be even higher.
Significantly higher, yeah. The implied number is maybe around $18 billion net for FY26.
Wow, where's that money going?
Primarily DRAM front-end equipment, the machines making the wafers and fab construction.
Yeah.
And the focus is clearly on prioritizing the 1 gamma node transition and, of course, HBM capacity.
Investing heavily in the highest ROI areas.
Precisely. And they seem very confident it'll pay off quickly. They're projecting significantly higher annual free cash flow in fiscal 26 compared to 25, driven by that combo of better pricing and the much richer margins from the product mix.
So big spending, but laser focused on creating or maybe maintaining scarcity in the most valuable market segments.
That seems to be the strategy.
Okay, let's look at the segments. They gave some new profitability details, breaking things down.
Yeah, this was really helpful. They created a new cloud memory business unit, CMBU, basically HBM and data center DRAM.
The core AI stuff, how did that look?
It accounted for 40% of total revenue.
Yeah.
And the gross margin, 59%.
59%.
Yeah. Nearly 60% gross margin. That's the AI premium, the HBM leadership, right there in the numbers.
Yeah.
That's the target every competitor is shooting for.
Incredible. What about the other segments?
Okay, so the core data center business unit, CDBU, that's SSDs, traditional server stuff, was 14% of revenue, still a very healthy 41% gross margin.
Still strong.
Then the mobile client business unit, MCBU phones, PCs, that was 33% of revenue, with a 36% gross margin. Respectable.
Okay.
And finally, automotive and embedded, AEBU, was 13% of revenue at 31% gross margin.
So when you line them up 59%, 41%, 36%, 31%, it's crystal clear where the overall margin list is coming from.
Absolutely. It just reinforces that the whole strategy hinges on pouring resources and capacity into that high-flying CMBU segment, tells you exactly where they'll prioritize investment.
Takes sense. Now, we shouldn't get too fixated on the data center. They mentioned strength elsewhere too. PCs.
Yeah, the PC outlook actually improved. They now see mid-single-digit unit growth for calendar 25, up from low single digits.
Why the improvement there?
Two things mainly. The Windows 10 end-of-life deadline is pushing companies to upgrade, and then you've got the new AI-enabled PCs starting to roll out.
And AI PCs need more memory, right?
Significantly more DRAM, so it's a nice content growth story for memory suppliers, even if unit growth isn't explosive.
What about mobile phones?
Smartphone unit growth expectations are still kind of modest, low single digits. But again, it's about content. AI-ready phones are driving up DRAM needs. They said a third of flagship phones shipped in calendar Q2 already had 12 gigabytes of DRAM or more.
12 gigs becoming standard at the high end.
Yeah, and that mix will likely keep shifting up, going from 8 GB to 12 GB or more across hundreds of millions of phones. That's a lot of extra demand.
And auto industrial.
Demand strengthened there too, better than expected. And profitability improved as they shift those segments to more advanced nodes like D5 and LP5, plus better pricing.
And they even mentioned investing in Virginia specifically for the older D4, LP4 stuff, for those long lifecycle customers.
Right, which shows they're managing that legacy tail, supporting those crucial customers while still pivoting the main resources. It's about flexibility.
And speaking of resource allocation, they made a specific move there, right? Exiting something.
Yeah, strategic exit. They've stopped future development of mobile-managed NAND products.
Mobile managed NAND. What's the thinking there?
It's classic portfolio management. Mobile managed NAND is a lower margin, pretty competitive area. By stopping future development, they'll still support existing products. They free up valuable engineering resources.
Mhm.
Those engineers who would have designed the next generation of that product can now be put onto data center SSDs or HBM design or other areas where the ROI is much, much higher. It's
Wow.
about focusing talent where it makes the biggest difference.
Makes strategic sense. Focus on the winners.
Exactly.
Right.
And this flexibility ties back to HBM supply too. Now that their HBM market share is kind of aligned with their overall DRAM share, they have this ability to shift wafer starts.
How so?
Well, HBM uses those valuable 1-beta wafers, but so do other high-end DRAM products.
Mhm.
So they can manage that mix, decide wafer by wafer almost, where the best return is ultra-high margin HBM, or still very profitable non-HBM data center DRAM, depending on demand, pricing, customer needs. It's dynamic management to maximize the value from every single wafer.
So looking back, FY25 was records across the board. FY26 guidance points even higher, bookings look strong, the big picture seems clear. This company looks incredibly well positioned, benefiting hugely from AI investment. Plus, they're the main US-based memory maker getting Shichipi's Act support.
Yeah, the whole conversation really underscores that fundamental shift AI is causing in memory. It feels structural, multi-year, and the numbers are backing it up now. Which leads to maybe the final thought.
Go on.
Given these incredibly strong demand signals, HBM, LP5, even traditional servers getting a boost,
Yeah.
and the real structural limits on industry supply, like EUV lead times and just the cost of new fabs, how long can this intense focus on profitability last?
You mean versus the old habit of just building capacity like crazy?
Exactly. Will the discipline hold through 2026 and beyond? Or will the sheer scale of demand eventually tempt the industry back into a massive capacity race? That tension between supply discipline and potentially transformative demand, that it feels like the key dynamic to watch over the next few years.
A lot to think about there. Definitely a space to keep watching closely. Thank you so much for tuning in to the quarterly call. For more episodes, please remember to rate and follow our show. Until next time, stay curious and stay informed.